Okay. Good morning. Morning, everyone. Just had a minor connection issue as we were connecting into the stream just there, so we're going to have to run some tests and just ensure that everyone can hear me okay and everyone is here and we can chat because that was quite confusing. It's never happened before. Hi, Andonia. Andonia David, how you going? Yeah, so if I can get everyone, if you are here, just to give me a thumbs up, say good day. You can hear me, you can see me, and we are running smoothly because that was quite confusing what just happened. And I just want to ensure that everything is running correctly. I'll give a moment for everyone to get in here. Hi, Philip. How you going? Thank you for tuning in and saying hello. Appreciate that. It's nice to know that the chat is working. Anyone over on TradingView, if you can give me a thumbs up or give me a wave and let me know that you are there, just to ensure that everything is working correctly, because I did have a minor connection issue as starting the stream. So I'm not sure if we're transmitting. You can see and hear me. Awesome, Ahmed. Thank you. Thank you very much. All right, cool. We're up and running. Good. Nothing's wrong. I was worried. I was a little worried, but it looks like we fixed it. How's everyone doing? Happy Friday. Or for some of you, it'll be Thursday night. But yeah, how's your trading week been? As we just kind of chat for a little bit and have people come through and join the stream, we're just gonna have a little chat and allow that to come in before we jump into the bulk of what we're going to be talking about today. So how's everyone's trading week been? Is there anything noticeable that you want to mention, or anything you're proud of, anything you're not proud of? What's going on? Can you look at HBRM? I think I may have found a golden egg here for the OTC stock. Also, hi from the UK. Hello. I'll have a look shortly when I get into technical analysis. I don't trade a whole lot of equities, so I don't think my expertise will be too beneficial for you. But I will have a look a little bit later on as we dive into technical analysis once we've gotten through the bulk of what we're going to chat about today. Hello, thank you for tuning in. How's our YouTube guys doing? Is anyone over on the YouTube? Just want to double check that ever since Philip said hello, we haven't had any other movement. So I just want to make sure that that is still up and running. Little bit quieter. We are a little bit earlier than what we usually do. A little bit earlier in the US. Looking great on YouTube. Thank you, Grumpy. Appreciate that. Thanks for giving me that heads up and letting me know that. Greatly appreciate it. How are you? How is everyone doing? Yeah, I think most of the regulars expect this stream to be on in an hour because we have pulled it short a little bit. What's been the highlight of your week stock-wise? Haven't traded a whole lot of equities. I said I took Ryan Mattel long, the German stock, and cashed that out recently. So I guess that'll be my stock-wise. That will be my my highlight of the week. But other than that, there's not a whole lot that I trade when it comes down to equities. So yeah, sorry, I'm not much help. I focus mostly in Forex and commodities. So when it comes around to equities trading, it's more an investment rather than trading. Hi Stephen, how you going? Welcome. Super awesome, fantastic, Grumpy. Appreciate that. Okay, well we'll dive into the bulk of things. There's a couple of things I want to run through today, and if any point I am talking too fast or not fast enough, let me know. Or if you don't understand something and you want to ask a question, feel free to do so. I want to have a look at some of the trades I've done throughout the week, and then have a look on some of the fundamental plays that I took as well. That a lot of people don't really do when it comes down to forex trading. They kind of ignore the fundamental aspect and trade technical analysis solely, which can be beneficial, but I also like to take those things into account as well. So first of all, what I'll do is get up our trade ideas page here on the TradingView account. For you guys that are on YouTube, if you're not following our TradingView account, come over and have a look. We do a lot of different ideas. what I want to go through was this week's trade ideas. Now, we had a New Zealand US dollar trade idea earlier in the week, and I want to show you that one first, okay? So if we had over here, this is our trading view on New Zealand dollar, US dollar, okay? And this is on the 4-hour chart. And I drew this technical analysis and I spoke a lot about it. If you don't follow these, I post multiple of these a day talking about what I think can happen and how it can happen. And then I review them either in this live stream or in a further trading view idea. I'll look back and be like, this is how it played out. This is how I took it. Hi, Stephanie. Great to see you. Thank you for tuning in. So this was a very interesting one because we had 3 big impulsive moves, right, which is outlined by this purple squares. And then we have the filled demand, we have filled supply up here, and then we've got unfilled demand and unfilled demand. Now, it was questionable whether it was going to be filled or not because we did get close down here, and I was a little nervous about it. But then we had this 4-hour weak supply. Okay, so I wasn't massively confident in the weak supply, but if we come around the filled, if we're looking at more resistance rather than supply and demand, and then look at this weak supply here, I definitely could see a turning point in this area to push down to this 4-hour demand, even halting at this demand here. Okay. Now I spoke about it. I don't just enter blindly when I paste these ideas. These ideas are ideas that are coming to fruition. It's not a signal. Okay. What I want to see, I talk about here. We're not entering blindly. I do want to see a solid bounce on the 1-hour, 15-minute chart from the 4-hour weekly supply. I want to see a trend line break. I want to see structure breaks. I want to see a solid indication that we're going to head lower from this area. We don't just blindly buy or sell when we get up to this area expecting or predicting it to bounce. Yes, that is my overall bias. Yes, that is my prediction, but I want confirmation that I'm right. I don't want to just enter blindly. So we don't. Okay. I'm going to hit play, and this is how it played out. So as you can see, we had a strong pump up, and this strong pump up was actually during the Aussie dollar interest rates release. Now, the New Zealand dollar and the Aussie dollar, they very much coincide. If New Zealand dollar gets really good news, the Aussie dollar sometimes goes up. If the Aussie dollar gets really good news, not only does the Aussie dollar go up, the New Zealand dollar, it carries them both. They're very correlated. So when we did get that original push, that was from everyone flooding into the Aussie dollar based on the interest rates, which I'll discuss a little bit later. So we had that, and then we had the excuse me, and then shortly after we had the ISM manufacturing PMI, which was good news for the US dollar, which then flooded it back in. So this is why it's important to also look into fundamentals and understand them, because here you might just be looking at that going, oh yeah, massive liquidity grab and a whole lot of volatility, but there was a reason behind it. There was something imploring that's going to happen. So as you can see, we ripped through. We did do a bit of a liquidity grab at the top, and then whipped back down, and now we've come back down to the bottom demand area. I didn't take the trade. The reason I didn't take the trade is because we ripped through these areas. I wanted to see a bounce within this area and then a pushback. Given the good data from Australia and the interest rates, which was kind of expected, and it did such a large move, it was very predictable. And I'm going to show you that I actually explained to everyone that it was very predictable earlier in the week. We popped up and then we shot back down. So overall, the analysis was decent. There wasn't a trade there, but I know my bias and my analysis was correct. Okay, I didn't make any money on it because it was a little bit crazy. But overall, I'm happy with the way it moves, and I'm happy I didn't take a trade. Yes, I could have pipped some in a little bit there, but it's not my strategy. So overall, as a trade, it was nice. I like what I see. I did a Bitcoin of 70K, just kind of showing some strong supply and demand areas on Bitcoin and how I believe it could act in the next few days. It's pulling down into this demand area as I thought it would. I expected it to do a little bit longer, but it looks like it's pulling straight in. And then I'm expecting it to get up to these all-time highs up here around 68,000. Don't take that as a trade. Don't take that as a buy blindly, just because I think it might get up to here. It was just a simple technical analysis structure that people who trade Bitcoin, you might appreciate that in areas that I can see this moving. Okay, I will later on, maybe in a couple of weeks, touch base back on this, have a look at where we are, and then coincide the analysis there. The economic outlook I'm going to go through. It's the first time I've done this, and if you didn't read this, I highly recommend you read next week's on Monday. I'm going to show you exactly why you should read this and exactly how everything that I predicted to happen happened today in today's live stream. It's the main thing I want to run through. We had another trade idea on the Great British Pound New Zealand market structure. We had 2 breaks of structure on the 1 hour. Now, for you guys that did see it, I did do a video yesterday talking about this trade, so I won't talk about it too much. But I did run through everything, how it works. Essentially, break of structure. I wanted to pull back into the demand and then a push to the top supply. If I click play, you're going to see we had a break of structure, pull back into the demand, and then a push to the higher supply. So overall, really, really fantastic trade there. I put this out on April 6th as the price was right here. And as you can see, it unfolded pretty close to what I expected, which is always nice to see. It's always good when a trade idea comes out that way. And then I released a video. We won't watch the video. Go over and check it out yourself if you want. I released a video talking about how to use the Forex screener, or even stocks and everything like that to find the right moving stocks you want to day trade or Forex pairs you want to day trade. It is doing quite well, and we did actually get put on the editor's page as well on TradingView. So if you haven't seen that, go check that out. And then this is just the trade review of this one. It's just a video talking about it a bit more in depth. I go through for about 6 minutes telling you what happened. Okay, so we had a look through everything we published on the TradingView account today. There wasn't a whole lot of actual trades, but there was a lot of content produced this week, and a lot of more in-depth content, as I didn't see a whole lot of trade ideas out there for my technical analysis setup. I did take a few trades fundamentally, but I didn't take very many technically and more of the swing moves like I usually do. So we're going to dive into the bulk of what I wanted to talk about, and that was our Forex weekly economic calendar. Now, I get all this data from Calendly on the Forex Factory, right? I have a look through at what either I want to trade or what I think will move the market, not always based off what these folders are. Sometimes you do get market movements based on the yellow folders, and they're quite, I don't want to say predictable, but you can get a very strong bias on the which way you can think that news is going to go and actually preemptively enter the market to do that, which I do quite often with a lot of these releases, especially on the Aussie dollar. It was quite a quiet week for the Aussie dollar apart from the cash rate. There was also some trade balances that came out yesterday, which I'll talk about and how I traded that. But if you haven't seen this, I published it out. I talk about the different talking points through the week fundamentally that you should be aware of as a Forex trader. Now, I don't just tell you what they are, and I don't tell you the times that they're coming out because I'm not a calendar. You can get that over at Forex Factory or wherever you get your news sources from. What I did do is explain my bias and how I'll be trading it if I'll be trading it. Okay, so a little bit different from usual Forex Factory or people coming through and being like, yes, be careful, it's NFP, and that's that. I actually discussed what I'm expecting from the data and whether or not I'm going to be trading it, and if I am going to trade it, how I'm going to trade it. So if you haven't had a read through all of this, I highly recommend you do. It's going to start being something I do weekly. Every Monday, I'm going to have a look at the week ahead, look at all the upcoming data, which ones I'm going to be keeping note of, and which ones I'm just going to be avoiding altogether. So there's a couple of things I wanted to point out. We have the Australian AIG Construction Index, not a tradable event. Okay, when we do have the Aussie dollar, we'll run through all the Aussie dollar stuff first. The construction index, the manufacturing PMI, the services, that type of stuff, I don't trade. I simply just use to gauge where we're heading for later news. So when we did get the construction index, as you can see, it went up to 56.5 from 53.4, which indicated that the market is expanding. If our construction industry here in Australia is expanding, it means we have more jobs, more work, more projects, more spending. Overall, it shows that the construction industry is growing, which therefore grows the economy. So if we see construction growth, AIG services growth, which actually was negative, and AIG manufacturing index growth as well, we've got a pretty good idea that our employment rate's going to unemployment rate's going to come down, our spending's going to go up, whatever it might be. You can kind of gauge based off how each market is running. So that was why I made note of that in here. I just wanted to say don't trade it, but it is a good idea to get the overall feel of what the market's doing. Then we had the cash rate, and the cash rate was the market mover, and I'm going to show you that on Aussie dollar, US dollar here. I don't think it takes a genius to tell me exactly where the cash rate data came out, but just in case you can't see it, I'm going to go on the 5-minute here. And something tells me that you're going to be able to pick exactly where this cash rate data was released. I don't know why I'm thinking that, but something about this chart tells me that you guys already know exactly where this data came out. If you run through what I said it's coming in a bit later today. We have very large definable tradable events. The RBA rate statement and their overall cash flow. The forecast is to remain at 0.1. I believe it will remain at 0.1. I'm not expecting any shock announcements. Okay, it came in at 0.1. That was pretty predictable. I think the rates were going to stay the same for a little while. There was a lot of talk about heightened rates. I couldn't see that coming through. The rate staying the same is indicating growth and is really good for the economy, which is why a lot of people come through and flooded into the Aussie dollar in that morning. And as you can see, it really did move. In about 20 minutes, we moved about 64 pips, which is a lot for the Aussie dollar, US dollar. So overall, that was a very tradable and predictable event, and that's what you could have caught from it if you're a proactive trader in that sense. And then later in the day, we had the ISM manufacturing PMI, which came up here for the US dollar. Once again, very predictable. I come through and said the market is forecasting growth in the industry. I'm not sure how well that's going to stand. It's not something I usually trade. However, given the previous data release, I'm unsure if it's going to be able to maintain its bullish forecast. Okay. The main thing I wanted to take away from this is there's a lot of different areas suggesting that we may not be as hawkish as what the forecast says. So I think we're still going to be bullish. I think we're still going to see good services PMI. Services PMI, not manufacturing PMI. I think we're still going to see good services PMI come out today on this day. However, I'm not expecting it to be as hawkish as what the forecasters are saying. I do expect this to come in a little less than what we're looking at, but only time will tell. If we have a look over onto the data that came out, you can see here the ISM PMI. Forecast was 58.6 from 56.5. We actually come in at 58.3. So we did still see really good growth, but we did miss that forecast as predicted. However, which was a good trap event, right? Because when we miss a forecast like that, it traps a lot of people into thinking it's bad. Okay, it traps a lot of people into thinking, oh, this is really bad. We missed the forecast. And you can see this first 5 minutes right here, they went bullish. People were buying and selling the US dollar, thinking, yes, that's terrible. We missed the forecast. But then when they really think about it and read the data, they understand that this is still massively, like, we may have missed what the forecast was, but overall we still have a large growth aspect in the services PMI. We've still gone from 56.5 to 58.3. Okay, that's still good growth. So when people started to realize that, the money flowed into the US dollar, and it actually caused another downtrend here. You can see it would have went a fair bit margin. So if you would have been shorting it somewhere in here, you could have pipped another 84 pips. So very volatile day. That day was the 5th of April, because you could have took it all the way to the tops given the cash rate, and you could have shorted it all the way to the bottoms given the services PMI. The rest of the day, there wasn't a whole lot coming out. We had the Euro retail sales, which I didn't bother trading. Service index, FOMC meeting minutes, I never trade, but it's always important to keep an eye on because it does send things crazy. And then I made a note of crude oil inventories just because I was more interested in having a look at what the US crude oil inventories were compared to what they previously were, given how everything's running at the moment. I just talked my head off. And I just explained a lot about how I run my fundamental analysis and base trades based off of that as well. Does anyone have any questions about that or questions about anything before I move on and start talking about more technical aspects? I know I talked quite fast there. We are going to be on a little bit tighter of a time frame as what we usually are today, which is why I'm talking quite quick and kind of flicking through everything. just because we are a little shortened on time. But please, if you have any questions or you have any pointers or anything that you just took away from that, please let me know. Send a message and we'll discuss. The stream can be a little bit delayed, so I'll wait to see if anyone wants to type anything. Has anyone ever made fundamental plays before? Does anyone trade the fundamentals or at least analyze the fundamentals to get a bias on which way they believe a currency is going to go? A lot of the time it's the best way. I know a lot of people do like trend analytics to understand which way we're going, but sometimes the best way to understand the best part of a currency when swing trading is find the good ones, find the weak ones, pair them against each other, and you've got yourself an uptrend. Happens quite frequently. It's good when it comes down to technical analysis to have that fundamental bias. I'll give it a little bit of a moment to see if anyone wants to. Very quiet today. Today's live stream compared to the others. Probably my fault for chatting so much about fundamentals, but is everyone still there? Just double checking that. Is Forex Factory a great source? Forex Factory is a great source of finding what's being released. So it's a great source of understanding what time data is being released and where you kind of want to place yourself or be out of a trade. I wouldn't base your the forecast they get. I'm not too sure where they get the forecast from. I believe it's from big banks and hedge funds, right? And then followed by an average. But I wouldn't run any trades based on the forecast because a lot of the time we don't hit the forecast, right? Sometimes actually the forecast can be very wrong and you can predict that that's going to be very wrong. Sometimes you look at the forecast and you look at the previous data that come out and you're just like, how is that what they're forecasting? And then you get a massive shock forecast and it moves the market brilliantly. So if you're able to preempt that they shouldn't be forecasting that, like a couple of things I did this week, then you're able to make a lot of money in moving that around as well. So I highly recommend using Forex Factory. It gives you a good insight on what everything is and why traders care, when it's released, how often it's released, what it can affect and what it can implement. Highly recommend doing that. It's great to know all that. Trends and momentum. Correct, yes. PJ says, I don't use fundamental analysis. It's fair enough. It depends on what type of trader you are, but I definitely think it's something that benefits me as a trader, 100%, because I get my swing trading analysis. I can do the fundamental aspect too and get kind of a bias on what I'm expecting. Horman says, seems like bounces from news seem to go back where they were. Sometimes. Depends on the news. You can fade news. That's what you're kind of referring. This right here was the FOMC meeting minutes. Obviously, I don't trade that, but it depends on the news. You can look to fade it, but yeah, this one was an interesting one because Aussie dollar has been very strong recently, right? Okay, so every data release we're kind of popping up, and we did here. But the fact that we moved so fast, so quickly, a lot of people were starting to take profits. All the buyers that were down here were very happy with this move, and they were going to start taking profits, which will push the price down anyway. On top of that, we then had the services PMI from the US dollar, which was good data. So I think that's why it kind of retraced all the way down here for both aspects like that. Not only did we have a massive move and everyone kind of taking profits, but we also had some good news for the US dollar, which was pushing it back down. But it doesn't always, because you can see we had the good news for the US dollar. We haven't come back up to this price. FOMC meeting minutes, we popped up, then we had the bad news, the good news for the US dollar is pushed down. We haven't come back up to this price. So not always, I wouldn't recommend it, but sometimes there are a lot of people I know that like to fade news. So wait for the data to be released, wait for the initial price, and then look to fade it. Not something I like to do unless it's like a shock announcement, but yeah, it depends on how you look at it. Thanks, Stephanie. Thanks for letting me know. Any opinion on client sentiment gorges? No. No, I don't. I'm assuming you're referring to like when different what's the word I'm looking for? Liquidity providers and hedge funds and stuff release a sentiment gauge of where they believe most buyers are, most sellers are, or you might get a broker that does it, releases that most of their traders are in positions buying, most of their positions are in selling. No, I don't find much use for that. Like you look at the stat out there, especially in forex trading, they say like only 95% of people lose, right? 5% of people win. If that's the case, looking at what everyone else is doing is just going to hurt you. It doesn't matter what everyone else is doing, especially in such a large market like this, because those everyone else, the majority of them are probably trading CFDs, so it's not going to move the market anyway because they're trading CFDs, right? It's not being printed on a live market. Now, if you're getting a gorge based off of like futures traders and stuff like that, maybe. But most of the gorges that you get out there and from CFD brokers, it's trading CFDs, right? So their market, like it's not being printed on the market when they do make that. They just got an agreement with the broker, so it doesn't actually affect the technical analysis. So yeah, it's tough to get a gorge like that now when it comes down to those things, because you got to remember, and then you've also got to ask whoever's posting that gorge, that sentiment gorge, what are they getting from it? What do they want from giving you that data? And what's their position in the market? You know, are they a trading firm like us, and do they want to actually help the traders? Maybe. Are they a broker and they kind of want to get you to buy this pair because their analysis is coming down? Yeah, you've got to ask these different things. I wouldn't base my analysis off of someone else's gorges. I'd rather build a bias myself so I can trust the data accordingly. That's just my opinion anyway, Grumpy. I like to base everything I'm doing, my strategy, my decisions. I like to be in control of the situation. I find once you start bringing other people's analysis, other people's ideas, and flood them all in, I start getting lost and confused in what I'm doing because I don't know what I'm doing because it's someone else's analysis or someone else's gorge. So if you're in control of everything, you know exactly where to blame if something goes wrong, so you know exactly where to improve. If you're using everyone else's analysis and everyone else's opinion, you don't know what needs improving because you don't understand what actually went through their analysis to get those numbers. That would be my advice to you, Grumpy, and that's how I've always had an outlook on it anyway, which I think is a good way to do it. Being in control of everything, your strategy, everything. What strat do you use? Depends what I'm doing. Fundamental analysis, I've kind of just talked about it, how I trade the fundamentals. But when it comes down to technical analysis of swing trading, I look for supply and demand areas and trend changes. So I look for a good push against the trend, a pullback, another push against the trend, and then on that pullback, I'll look to short it. You can kind of see how I trade my strategy through all my trade ideas. As we look through all the different ones, let's see if I can get you some examples here. Euro Swiss franc. Okay, we had a discussion. We had a break of structure, a pullback into the demand area. If we hit play, you can see we pulled back into that demand area and then shot up. We would have had that. We've had see the ones that I'm actually trading. I sometimes publish things just kind of like this that you might want to use. Not something I trade, but something you might want to use. Obviously, this one didn't work out, but that's thanks to the beautiful news that we had around. If you look at my Great British Pound New Zealand one, break of structure, pull back into the demand area, and then run. As you can see, break of structure, pull in the demand area, and run. So I have a set system in how I want it to do it. Obviously, I don't buy it blindly, but I do pretty much talk everything through here on the TradingView account when running through these different things. And you can look like a back few pages of ideas, and you'll see that it is still all very much the same strategy every time I'm out here trading. So that would be the strategy I use, I guess, is how I'd explain it. It's very complex, but also extremely simple. I look for a change in trend on a higher time frame, go into the lower time frame, and find an entry point. Very, very simple strategy, yet there's still a fair bit of moving parts that you need to understand from it with supply and demand areas and stuff like that. But I'm always very open about it, and I'm always talking through it. I don't want to teach my strategy per se, because it defeats the purpose of our hedge fund. We want every trader having their own strategies and trading their own strategies, because it gives the firm diversity. If one strategy goes bust, it's not an issue for the firm because we've got another 100 traders trading their own strategies. It's still working out fine. And then same thing with trading strategies. I don't think is the most important thing in trading. Strategy is actually one of the easiest parts. You can get something really simple and it will work long term. So strategy is only like 10% to 20% of actually being successful in trading. The rest is all emotion, understanding, and discipline, which is where the topics I prefer to sit with and help our traders with, because if you keep blaming your strategy, you're just going to keep jumping from strategy to strategy to strategy. So yeah, it's not a great thing to be doing. How often do I stream? I stream here every Friday. Actually, a little bit later than this time. I'm early today, but around this time every week. It's Friday morning for me, so I'm saying every Friday. It might be Thursday where you are, but this time every week I stream, and then I'm on the live trade. I do all the trading view ideas. I do like pretty much two a day, so you can always reach me through there as well. I see you still haven't found artwork for your wall yet. Correct, Stephanie. I'm still trying to get some artwork for the back wall. It's because I'm really unsure on what to get, and I don't want to just get anything. I want something that speaks to me in that sense. So I'm really struggling to find anything that grabs me. So I'm just waiting. I'm just waiting until I find something that really interests me. But yeah, if anyone does have any recommendations for artwork, I've got a big empty wall up here that needs a lick of color. All right, we've talked through the fundamentals. We've talked through the trade ideas this week. Does anyone have any topics they want to run through? If not, we'll dive into some technical analysis and have a look at some charts. But is there anything anyone wants to touch on? Do you need help with anything? Don't be afraid to reach out if you're struggling with a certain area. I'll help you right here, and there's always quiet people in these streams. They might actually be struggling with the same thing. So me explaining it to you might also help them. So if you do have any questions that you want a little bit of help with, or anything that you just kind of want to touch on, please, now's your chance. Ask the questions, ask away, and I'll do all I can and use all my expertise and experience to help you in that sense. I'm doing more and more one-on-one portfolio analyst meetings with you guys, which is fantastic because it's great getting the opportunity to sit down with some of our traders and help them improve. And I'm learning a hell of a lot from so many different traders on how different people respond to different emotions and in the way to respect them and to hear them. So as my knowledge grows there, I guarantee my knowledge in helping you guys is going to be a lot better too. A quick drink. So, is there anything anyone would like to touch on before we move on? Anything at all? Fire away. Now's your opportunity. If not, you'll have to wait till next week. Actually, what news do we have coming out next week? That's worth checking. The US dollar. Ooh, okay. CPI, PPI, and retail sales. A few tradable events in the US dollar next week. But the main one that I really like to trade, because it's in my time zone, had to run off midstream, but is this feed replayed afterwards? Correct. You can see it here on TradingView. It's always here. If you click on our profile and then click streams, it'll always be here. Or you can head over to YouTube and also see it there. I haven't touched on the ticker yet. I'll do that shortly. I haven't touched that yet. That's the magic key, finding what works for you. That's the holy grail. We're all individuals, therefore one fit will not fit all. Well done, Jordan. Exactly right, Flash. Everyone has their own strategies into what works for them, and it's important that, we have a quiet week for the Aussie dollar next week. It's important that we find the strategies and everything that works for you. because there's so much data to sift through, just concentrating on high news good enough. Uh, it depends on what you're trying to do with that news. Why do you, like, does that make sense? What are you trying to do, what are you trying to get from having a look at that news? Are you using it as an avoidance so you don't trade during that time, or are you using it to try and trade it? Like, what's your aspect with going through that? As an Aussie, are there times in the Asian session you avoid? Absolutely not. I love the Asian session. I love the Asian session. I sit through it plenty of times. I've got this sessions right here. I tick this. It'll tell me exactly where the Asian session is, each grey area. And no, there's no time. I avoid the first couple of hours, right? Because usually you find spreads get a little bit wide and it's a little bit boring. But once we break through there, main pair Aussie dollar Japanese yen. As you can see, we get plenty of movements for the Aussie dollar Japanese yen. No, I don't try to avoid any times. As we get round to this area, just before we go into the European market to start look to get out of positions if I am in any, and I don't look to add any positions as we come to the close of the Asian session. But no, there's not really any sessions I avoid, to be honest. Any times I avoid anyway. The only Thursday at 11:30, so what, 2.5 hours from now on Thursday, we have the unemployment rate, which is going to be fun because we can actually use the PMIs to gauge our employment. I'm going to show you exactly how we do that. If we go back to our AIG manufacturing index right here, okay, you click this link, it's going to take us to the data release from AIG Group. If you scroll down, you can see employment in the manufacturing index, right, which is our biggest industry, is up 9.9 points. So we were looking down, okay? Well, that's a long run average, sorry. We were negative because 9.9 minus 53.4. Anything below 50 is market contraction. Anything above 50 is market expansion, okay? So we're up 9.9 points into an expansive market on employment. Unemployment right there. Coming up ahead, we're having a look into Aussie dollar unemployment rate coming out. We don't have any forecasts yet, which is interesting. We don't have any forecasts yet. So I think we might, depending on what the forecast is, I think we might see some good data up from 4%. I reckon we might even get back up to these 4.2s, maybe a 4 point. No, sorry, we want to go down. We want to go down. We don't want to go up. I think we'll get down to like maybe a 3.9. Maybe. Sorry, I misread that. So I'm expecting good news, maybe flat. We haven't gotten that low in the 20th century. If we manage to get below 4 here, buy Aussie dollar. Buy Aussie dollar. If we get down to 3.9, like that's the lowest unemployment rate we have had, at least from the scale of what I can see. So if we do get that low, start looking to buy Aussie dollar because that would be incredible. So that'll be interesting. Keep an eye on that this week. Keep an eye on that. Your voice is very listenable. Well, that's thank you. It's a great compliment, and that's good to know. I'm happy you like listening to my voice. Grumpy said just for avoidance. Yeah, maybe for avoidance, have a look at the red folders. The oranges can move the market as well, depending on the session you're trading. If you're trading like European and US sessions, Grumpy, tick the orange as well, because with a lot more volatility, a lot more volume, a lot more movement. The Asian session makes nice setups leading into the London session. Yeah, it does. Only I just don't like trading till 7 p.m. at night. I'm in the office here from 7 a.m. in the morning. Actually, today I was in at 6 a.m. in the morning. I don't want to do a 13-hour shift every day. So I stick my expertise into the Asian session or do my swing trading. But for day trading and mostly news trading, Aussie dollar and Japanese yen are my favorites because they're in my time zone. That's quite simple, really. All right, you asked for me to check a ticker. Now, I'm not exactly 100% sure what I'm going to be checking for here because, as I said, I don't really trade equities, but I will do it because you've been a good sport. Okay. Not going to look on the 5 minute. We're going to look on the daily. Have I got the right ticker here? Am I looking at something that is this the right ticker with 0.0004 cents? Trying to day trade a penny stock? Is that what's going on? Well, that was actually that looks like a pump and dump if I've ever seen one. This is looking like a crypto market. What has happened? Have I got the right thing up here? What has gone on here? Just saw it and I was intrigued by it. Yeah, I mean, there's not a whole lot of technical analysis I can do because it was pretty much bankrupt. I'm not too sure what it is or how it works. I'm sorry, I'm not going to be able to be much help there. But yeah, that looks a little bit wild. I definitely wouldn't go near it. Looking at that, sure, you could, have a tiny little pump up and it could make you 2,400%, but it's worth 0.04 of a cent. That's not even. Yeah, no, not me, not me. Sorry, mate, but that's definitely not for me. Grand Theft Oral says, hi there, as a new trader, is it good advice to stick to one pair and to trade at the same time each trading day, or does this really matter? Thanks. Thank you for your question. Tough one, because it depends on your strategy. And what I'd recommend is, depending on how you trade or what you do trading it, have a look at back testing and back test at different times as well, not just your strategy, but how it all works. I'll check your US dollar for you in just a second there, Big Artist. What time frame did you want on that? But Grand Theft, yeah, so like it depends on how you trade it all, because yes, certain times of the market you will see increased volatility and decreased volatility, which will then coincide with better strategies depending on how you're trading. Sticking to one pair, sure, why not? I guess it reduces your distractions and your emotions because you can focus on just the one and get to grips with that. I think that is a good idea. But once again, it depends, because if you've got a strategy where you take like 1 or 2 trades a week, it's going to take you a long time to have that learning curve. So you're probably going to want to add a couple more pairs in so you can make more mistakes so you can learn from them, right? Whereas if you're doing trades where you're taking like 6 or 7 a day, then for sure just stick on like one pair. Sorry, I can't give you like a definitive answer because there's so many different variables that will depend on. So it's quite tough for me to be like yes or no. Euro US dollar 1 hour. Let's turn that off. What do we got? Euro US dollar 1 hour. Yeah. I'm not sure. I don't love it. We've obviously had a very solid downtrend here, a bit of a push. Broke that trend line, but it's very steep, so I wouldn't like be overly confident in it anyway. And then formed a bit of an area. So I think what we're going to see is we've got liquidity down here and we've got liquidity up here. I think we're probably going to get a fake out into that liquidity in either direction and then push the other way. So keep an eye on it. But if we do get a push, I'm more inclined that liquidity is going to be here because all the beginners are going to be like, yeah, let's keep shorting this. And if we pop out here, I can see it bouncing back up. So keep an eye on that. But I'm not too sure. No worries, Grant. I'm glad I can help you as much as I can. It was just a tough question to answer. What do I think about US dollar Japanese yen? You are in a long. Well, it's opened well. Japanese yen's opened well. Did we have anything worth noting? No. Broken above there. In an obvious uptrend, we had a push up. Could argue a break of structure, but I don't like it. Double bottom there. Break of structure there, and then a break of structure there. If I was trading my type of strategy, it's not clean enough to the point I want to trade it, but I'll be looking for some kind of buy in this area. But it looks like it just wants to kind of run a little bit. So, yeah, I don't have an overall bias. It's going to be tough to get through these areas over here. You can see this whole area here is going to be an interesting one. Holding a buy position into that area is risky, in my opinion, but I'm not too sure, Stephanie. I'm really not too sure on that one. I was told to study my strategy, then use proper risk management. 1 to 3% and be disciplined, stay consistent. What's your thought on that? I think 1 to 3% per trade is ridiculously high. I don't know why so many educators out in the market world of education say that you should risk 1 to 3% per trade. I think those numbers are way too high. It's every drawdown you have, and even the little drawdowns when you lose 6 trades on the trot, you're down 12%, and that hurts you emotionally, and that'll make you want to swap strategy or make you want to give up. It's just too focused on profits. You bring those numbers right the way down, less than 1% per trade. On my 5%ers real account that I've traded a couple of times here live, literally I do 0.25%. On trades that I'm not massively confident in, 0.1%. That's all it is. That's all you need. Risking those high numbers, they're too much. Yes, stay disciplined. Yes, stay consistent. How are you measuring your discipline? How are you measuring your consistency? It's easy to say that. I'm like, yeah, I'm consistent. But how are you measuring it and finding out whether you actually are consistent or not? Journaling, stuff like that, they're things you want to take under the belt. Hedge funds risk about 0.1 to 0.25%. Exactly right, Park. I myself risk that much. We don't want any more than that. Any more than that, the exposure is huge. And if you want to actually see longevity, there's a reason they risk that low, is because they can afford to go through big drawdowns and it not be massively detrimental to not only the funds but also to the trader themselves, as they can pull themselves out of it because they haven't lost that much. Whereas if you're risking 3% a trade, you're going to go down 20% just after like 6 or 7 losses. I don't know about you, but I won't stomach that. If I lose 20%, like that's tough. That's a lot of money. That's a lot of money. So yeah, I recommend bringing that risk down, especially while you learn. But yes, remain disciplined, remain consistent, and study your strategy. But make sure you have things in place to be able to recognize and study. Like, how do you know you're making progress? How do you know you're staying consistent? How do you know you're remaining disciplined? You know what I mean? Like, have different noting points so you can track that. All right. Why did that not work? There we go. That worked. We are coming towards the end here, guys. So does anyone have any questions just before we switch it up and you guys get back to trading and I get back to work? No worries, big artist. I'm happy to help. Happy to help. Does anyone have any questions for me or any topics they would like to talk about? Anything they want to go through before we call it a day? How long do I hold on to trades? It depends what the technical analysis is telling me, Park, and what trade I'm in. If I'm trading fundamentals, when they're not quite hitting my target, yeah, look, it once again, it depends on what the chart's telling me, what the trade is that I like trade, like what the analysis is in with the trade. So like I don't have a set time of like I won't hold any longer than this. But the moment I start seeing the chart starting to be a bit longer and looking to go against me, then I'll start taking some of the position off. If the chart's still looking bullish, I could hold it for 6 days. So it depends on what I'm trading and how I'm trading it. I don't have a set time frame. .25% is more like it. I agree, Flash. I agree. Okay. Is that, yeah, why I'm Terra Pippin? Do you have a question? Nice. If we are US and we trade on the 5%ers, is FIFO engaged? What are you referring to by FIFO? I'm not sure if I'm picking up the same thing as what you are when I look at FIFO. I've just had a quick look at it. A fly in, fly out arrangement, is that what you're... Oh, first in, first out. As in, if we're in the US and we trade on the 5%ers, is first in, first out engaged? I'm sorry, I'm not... Apologies, maybe I'm just misreading it, but I'm not quite understanding in what your question is, or like what you're trying to get. I think FIFO is only when US is trading direct with brokers. Yeah, so I don't know. So I've never traded out of the US, so I'm not sure on the legislation there with trading out of the US and how they see it. But thank you, Grumpy. Thank you for helping me with that. I was a little unsure with that one. Exactly. Yeah, we're not a broker. You know, we run through liquidity providers. You just trade our accounts with that liquidity provider. So I think most of the rules that you usually go through with having trading with a broker doesn't apply as much, because we are we aren't a liquidity provider. We just give accounts, essentially give access to accounts for you guys to trade. Okay, that's going to do us all for today. I hope you all have a fantastic weekend. As always, take some time off, go spend some time with your friends, your family, get out of the house, refresh, come in on Monday or Sunday, depending on where you are. Get ready for the market ahead. There's not a whole lot of news. There is for the US dollar, plenty of news for the US dollar, so keep an eye on that. Jordan, I was asking a previous question regarding holding onto trades, because I was holding a profitable trade for a day, 10 to 15 pips away from my target, got fed up, and then it shot up another 30 pips. That's a classic. That's a classic park, and it happens all the time. So you want to understand what the market's telling you rather than being impatient, right? Don't trade your P&L. Turn your profit and loss off during your trading, okay? Turn it off. You don't need to see that. All you need to see is a technical analysis. Doesn't matter how much you're in profit. Doesn't mean how close you are to your take profit. It shouldn't affect your decision making. Your analysis is your analysis. Stick by your analysis. Trade your analysis. I'm assuming you've tested it and you know it works. Do that. All right. Don't let your running P&L affect your decision making. Terrapin, you can even hedge on some of our programs. That's right. We have hedging accounts and we do also have netting accounts. Rock on. Thank you. No worries, Grumpy. Absolute pleasure seeing you here today. Horman, thank you very much. I look forward to you sending me your report today as well, Horman. I want to have a read through that as well. So keep that coming in. I'm going to hold you accountable, as we discussed. Thanks for the stream. No worries, Grand Theft Oral. Thanks for joining me, Christopher. Thank you. No, Chrysostos? Oh, I'm sorry, I'm going to butcher that. I'm going to call you Chriso. Thanks for tuning in today. I appreciate it. Everyone, Sarah Pippin, thank you. Stephanie, thanks. All right, guys. Everyone have a fantastic day. I hope you all have a wonderful weekend, and I'll see you next week as we catch up again to rediscuss the markets. Thanks, guys.